Let us start with new chapter. Chapter number 2. GST. Question number 1. What is GST and explain its key features? GST stands for Goods and Services Tax. It is essentially a form of value-added tax that is implemented at every stage of the supply chain where value is added. It is applied on both goods and services, ensuring that the tax system is unified and more streamlined. GST has been a transformative reform in India's tax landscape, promoting greater economic integration and simplicity. By eliminating the multiplicity of taxes, streamlining compliance, and promoting economic efficiency, GST has built a more robust and transparent tax system. While challenges persist, the continuing evolution and refinement of GST aim to address these, ensuring a fair and efficient tax regime for businesses and consumers alike. Key features of GST. 1. Single tax system. Before GST, there were multiple indirect taxes such as VAT, service tax, luxury tax, and more. After GST, all these taxes were subsumed into a single tax, making the tax structure more straightforward and easier to manage. 2. Destination-based tax. Before GST, taxes were applied on the point of origin of goods or services. For example, if a good was produced in State A and sold to State B, State A would collect the tax. After GST, taxes are applied where goods or services are consumed, not where they are produced. Thus, State B would collect the tax, ensuring fair revenue distribution among states. 3. Input tax credit, ITC. Before GST, businesses suffered from the cascading effect of taxes, where they couldn't deduct the taxes already paid on inputs from their final tax liability. After GST, businesses can claim credits for the taxes paid on their purchases. This reduces the final cost of goods and services for the consumer and removes tax on tax. 4. Multi-stage tax. GST is imposed at each step of production and distribution. For example, consider a supply chain where a manufacturer sells to a wholesaler. A wholesaler sells to a retailer. A retailer sells to a consumer. Each stage, GST is levied on the value added. However, each participant in the chain, except the final consumer, can claim back taxes paid at previous stages through input tax credits. Next question. Question number 2. Explain various principles on which GST system is based upon. Answer. The Goods and Services Tax, GST, system is built on several key principles that aim to make it a comprehensive, transparent, and efficient tax regime. Here are the various principles on which the GST system is based. 1. Destination-based taxation. Principle. GST is a destination-based consumption tax. Explanation. Under the GST regime, the tax is collected by the state where the goods or services are consumed, rather than where they are produced. This approach ensures that the revenue accrues to the state that consumes the goods or services, promoting fair distribution of tax revenue among states. 2. Dual GST. Principle. GST is levied concurrently by both the central and state governments. Explanation. Central GST, CGST, levied by the central government on intra-state supplies. State GST, SGST, levied by the state governments on intra-state supplies. Integrated GST, IGST, levied by the central government on interstate supplies and imports. Union Territory GST, UTGST, levied by Union Territories. 3. Comprehensive taxation. Principle. GST is a single tax on the supply of goods and services, from the manufacturer to the end consumer. Explanation. It encompasses multiple indirect taxes previously levied by central and state governments, such as excise duty, VAT, service tax, etc. The objective is to simplify the tax structure by consolidating various taxes into a single system. 4. Value addition. Principle. GST is based on the value addition at each stage of the supply chain. Explanation. Tax is levied on the value added to the product or service at each stage of the production and distribution process. The final tax is borne by the end consumer. Businesses can claim credit for the tax paid on inputs, known as input tax credit or ITC, ensuring that there is no cascading effect of taxes, tax on tax. 5. Transparency and simplicity. Principle. GST aims to bring transparency and simplicity in the tax administration. Explanation. A uniform tax rate structure simplifies the classification of goods and services. Enhanced transparency through a robust IT infrastructure, GSTN, Goods and Services Tax Network. Common registration, return filing, and tax payment procedures reduce complexity and improve compliance. 6. Uniform tax rates. Principle. Uniform tax rates for goods and services across the country. Explanation. GST aims to create a uniform tax rate structure, replacing the varied rates earlier levied by different states. This helps in creating a common national market and reduces the distortion caused by different tax rates. 7. Technology-driven compliance. Principle. Leveraging technology for efficient tax administration and compliance. Explanation. All tax transactions and processes are done online through the GSTN portal. This includes registration, return filing, tax payments, and refunds. Minimizes human intervention, thereby reducing errors and the scope for tax evasion. 8. Reduction in cascading effect. Principle. Eliminate the cascading effect of taxes. Explanation. The input tax credit mechanism ensures that taxes paid on inputs are offset against taxes payable on outputs. This means tax is levied only on the value addition at each stage, not on the entire value. 9. Wide coverage. Principle. Broad base covering both goods and services. Explanation. GST applies to all goods and services with a few exceptions. It covers the entire supply chain, from production to final consumption. 10. Seamless flow of input tax credit. Principle. Seamless flow of ITC across the supply chain. Explanation. Businesses can claim credits for the GST paid on purchases, which reduces their overall tax liability. Encourages compliance and formalization of the economy. 11. Compliance rating. Principle. Taxpayer compliance ratings to incentivize voluntary compliance. Explanation. Every registered taxpayer is assigned a compliance rating based on their record of timely tax payments, return filings, and other compliance requirements. Higher compliance ratings can benefit businesses by building trust with stakeholders. Thus, we can say that the GST system is designed to create a unified, efficient, and transparent tax regime. Its principles aim to make taxation fair, reduce the burden on businesses and consumers, and enhance compliance through systematic and technology-driven processes. By focusing on these principles, GST aims to bring about a significant positive impact on the economy by facilitating ease of doing business and fostering growth. Next question. Question number 3. Explain components and structure of GST. Answer. Components of GST. 1. Central Goods and Services Tax, CGST, or collected by the central government on intra-state sales, within the same state. Or revenue is shared between the central government and the state government. 2. State Goods and Services Tax, SGST, or collected by the state government on intra-state sales. Or revenue goes to the respective state government. 3. Integrated Goods and Services Tax, IGST, or collected by the central government on interstate sales, between different states, and on imports. Or revenue is later distributed between the central and state governments. 4. Union Territory Goods and Services Tax, UTGST, or collected for intra-union territory transactions. Or similar in nature to SGST but applicable in union territories without legislatures. Structure of GST. Intra-state supplies, or both CGST and SGST are applicable. e.g., for a good sold within Punjab at an 18% GST rate, 9% will be CGST and 9% will be SGST. Interstate supplies, only IGST is applicable. e.g., for goods sold from Maharashtra to Gujarat at an 18% GST rate, the entire 18% will be IGST. Next question. Question number 4. Explain need, importance, benefits of GST. Answer. GST system offers various advantages which cater to the needs of various parties and so it has gained enormous importance today. 1. Ease of doing business. Unified tax laws, registration processes, and compliance mechanisms. Before GST, businesses had to navigate multiple state-specific taxes and central taxes, each with its own set of rules, rates, and compliance requirements. This created a heavy administrative burden and complexity. With GST consolidates all these taxes into a single tax system with uniform laws across the country. This simplifies the tax structure and makes it easier for businesses to understand and comply with. Reduction of tax complexities and business bottlenecks. Before GST, businesses often faced delays and bottlenecks due to differing state regulations and the need to adhere to numerous indirect taxes. With GST, the streamlined tax process and elimination of interstate tax variances reduce potential delays and eliminate bureaucratic hurdles, allowing businesses to operate more efficiently. 2. Cost reduction. For manufacturers and retailers, input tax credit, ITC, GST allows manufacturers and retailers to claim credits for the taxes paid on inputs, raw materials, and services. This means they can deduct the GST paid on purchases from the GST collected on sales. Result: lower overall tax liability and reduced cost of manufacturing and providing services, thus lowering the production cost. For consumers, elimination of cascading effect. Before GST, taxes were levied on top of each other, tax on tax, increasing the final price of goods and services. With GST, the final tax is only on the value added at each stage, not on the entire value. 3. Increased competitiveness. Reduced overall tax burden and lower production costs. Simplifying the tax structure and providing ITC reduces the overall tax burden on businesses. Lower production costs enhance the competitiveness of Indian goods and services both in domestic and global markets. A more competitive market drives quality improvements and innovation, benefiting consumers. 4. Higher revenue efficiency. Simplified tax structure and increased compliance. Simplified tax laws. The streamlined GST structure is easier for businesses to comply with, leading to higher adherence to tax regulations. Higher compliance. Robust compliance mechanisms and the necessity for digital record keeping reduce tax evasion. Result: more efficient and higher revenue generation for the government, as a broader tax base contributes more effectively. 5. Improvement in export competitiveness. Zero rating of exports. Before GST, exporters often faced tax burdens which made their goods less competitive on the global market. With GST, exports are zero rated, meaning taxes on exported goods and services are refunded. This ensures that Indian exports are not subject to domestic taxes, making them more competitive globally. 6. Economic growth. Simplified tax landscape. A unified GST system eliminates multiple indirect taxes, leading to a more straightforward and predictable tax regime. This predictability fosters a business-friendly environment, encouraging both domestic and foreign investments. Boost to economic activities. Foreign investments. Simplicity and transparency in the tax system attract foreign investors. Encouraging domestic businesses. 7. Enhanced productivity. Streamlined tax processes. Digital and streamlined tax processes reduce the time and effort businesses spend on tax compliance. This allows businesses to allocate more resources towards core activities and strategic growth, fostering innovation and productivity. 8. Increased tax base. Mandatory registration and coverage. GST mandates that businesses above a certain turnover threshold must register. Inclusion of the services sector broadens the tax base, capturing a more significant proportion of economic activities under the tax net. A wider tax base helps in spreading the tax burden more evenly and increases overall tax collections. 9. Improvement in the investment climate. Simplified tax regimes and reduced litigations. Uniform and transparent tax laws reduce the potential for disputes and legal challenges. A stable and predictable tax environment is attractive to investors, both domestic and foreign. Lower tax-related disputes and simplified compliance attract investors looking for a stable and efficient regulatory environment. 10. Better supply chain management. Elimination of state-specific taxes and barriers. Before GST, state entry taxes and compliance requirements disrupted supply chains and increased logistics costs. With GST, Removal of such barriers allows businesses to optimize their supply chains for efficiency rather than tax considerations. Question number 5. Explain challenges and criticisms. 1. Complex initial implementation. The transition to a GST regime meant businesses had to overhaul their accounting systems and ensure compliance with new regulations. It took time for businesses to get accustomed to the changes, causing initial disruptions. 2. State revenues. States dependent on origin-based taxes faced potential revenue shortfalls. The central government compensates for these losses through the GST compensation cess, but some states have felt insecure about future revenue flows. 3. Compliance burden. Especially small and medium enterprises, SMEs, struggled with the initial burden of GST compliance. The need to file multiple returns and keep detailed records created challenges for smaller businesses. 4. Multiple tax rates. GST in India isn't a single rate tax but has multiple tax slabs, 5%, 12%, 18%, and 28%, which can create confusion. Determining which tax rate applies to which goods and services sometimes leads to disputes and compliance complexities. Next question. Question number 6. Explain in detail the process of recording GST transactions of purchase and sales in Tally package. Answer. To record the purchase and sales transactions with GST, one should follow following steps. Step 1. Create a company. 1. Open Tally ERP9 and press Alt plus F1. 2. Select Create Company from the Company Info menu. 3. Enter company details. Name, enter your company name. Mailing name and address, enter your company's mailing address. Country, India. State, select the state where your business is located. E.g. Maharashtra. PIN code, enter PIN code. Telephone no, fax no, enter telephone number if any. Email, enter email address if any. Financial year beginning from, enter starting date of the financial year. Books beginning from, enter the date from which you begin maintaining your accounts in Tally. 4. Select Yes for the Enable Goods and Services Tax (GST) option. 5. Set Alter GST Details. Yes. Step 2. Configuring GST Details. 1. Enter GST details. State. This should be auto-filled based on company creation info. Registration type. Regular, composition, unregistered. Choose as per your business type. GSTIN, UIN. Enter your GST identification number. 2. Set, alter GST details. Fill in all necessary GST details like GSTIN, UIN, applicable tax rates, etc. Step 3. Creating ledgers. You'll need to create various ledgers to keep track of transactions for purchases and sales, including GST ledgers. 1. Create customer, supplier ledgers. Path, gateway of Tally, accounts info, ledgers, create. Details to include name, name of the supplier, customer. Under, sundry debtors, for customers, sundry creditors, for suppliers. Maintain balances bill by bill, yes. Default ledger for sales, yes, for customers. No, for suppliers. GST registration type, regular, composition, unregistered, choose accordingly. Enter GSTIN, UIN, enter if applicable. 2. Create sales, purchase ledger. Path, gateway of Tally, accounts info, ledgers, create. Details to include name, sales, purchases. Under, sales accounts, for sales. Purchase accounts, for purchases. Set, alter GST details, yes. Type of supply, goods or services. 3. Create GST ledgers, output, input, central tax, CGST, state tax, SGST, integrated tax, IGST, union territory tax, UTGST. Path, gateway of Tally, accounts info, ledgers, create. Details to include name, CGST output, input, SGST output, input, IGST output, input, UTGST output, input. Create these based on type of transactions. Under, duties and taxes. Type of duty, tax, GST. Tax type, central tax, state tax, integrated tax, union territory tax. Percentage of calculation. Enter respective tax percentage, e.g. IGST 18%, SGST 9%, CGST 9%. Step 4. Recording purchase transactions 1. Path. Gateway of tally, accounting vouchers greater than F9, purchase. 2. Details to include, O supplier invoice number, enter invoice number. O date, enter the purchase date. O party A, C name, select the supplier's ledger. O purchase ledger, select the appropriate purchase ledger. O list of items, add items you purchased. This should include their HSN code, quantity, rate, and amount. O GST ledger, select the SGST, CGST, IGST tracks, ledgers accordingly based on intrastate or interstate purchase. 3. Save the voucher, accept, yes. Step 5. Recording sales transactions 1. Path. Gateway of tally, accounting vouchers greater than F8, sales. 2. Details to include, O customer invoice number, enter invoice number. O date, enter the sales date. O party A, C name, select the customer's ledger. O sales ledger, select the appropriate sales ledger. O list of items, add items you sold. This should include their HSN code, quantity, rate, and amount. O GST ledger, select the SGST, CGST, IGST tracks, ledgers accordingly based on intrastate or interstate sale. 3. Save the voucher, accept, yes. Step 6. Verifying reports and returns 1. GST reports, O path, gateway of tally, display, statutory reports greater than GST. O choose from various reports like GSTR1, GSTR2, GSTR3B, etc. 2. Verify GSTR1 and GSTR3B. Ensure all transactions are correctly recorded and reconciled. 3. Return filing. O export the GST data to JSON, Excel. O upload it to the GST portal for return filing. Tax rate configuration. While creating ledger groups and stock items, accurately define the applicable GST rates to avoid issues during later stages of accounts reconciliation and GST returns filing. Recording GST transactions in Tally involves meticulous setup of ledgers, correct entry of purchase, sales data, and diligent preparation for GST filing. Follow these steps carefully to ensure compliance and accurate accounting. Next question. Question number 7. Explain in detail procedure to generate GST invoices in Tally. Here's a detailed step-by-step guide to generate GST compliant invoices in Tally. Step 1. Create and configure a company. 1. Open Tally ERP9. 2. Create a company. O press Alt plus F1 greater than go to company info, create company. O enter the required details. 3. Enable GST. O select yes for the Enable Goods and Services Tax, GST, option. O set, alter GST details, yes. O enter the following GST details, state. This should be auto-filled based on company creation info. Registration type, regular, composition, unregistered. GST IN, UIN. Enter your GST identification number. Step 2. Create ledgers. You need to create various ledgers, such as party ledgers, sales, purchase ledgers, and tax ledgers. 1. Create party ledgers, customer and supplier. O path, gateway of tally, accounts info, ledgers, create. O details, name of the customer, supplier. Under, sundry debtors for customers and sundry creditors for suppliers. Maintain balances bill by bill, yes. Default ledger for sales, purchases, yes. Set, alter GST details, yes. Registration type, select the appropriate type. GST IN, UIN, enter the GST IN of the party. 2. Create sales ledger. O path, gateway of tally, accounts info, ledgers, create. O details, name, sales, GST. Under, sales accounts. Enable GST, yes. Set, alter GST details, yes. Type of supply, goods or services. 3. Create GST tax ledgers, O central tax, CGST, state tax, SGST, integrated tax, IGST, and union territory tax, UTGST. O path, gateway of tally, accounts info, ledgers, create. O details, name, e.g., CGST output, SGST output. Under, duties and taxes. Type of duty, tax, GST. Tax type, central tax, state tax, integrated tax, union territory tax. Calculation type, as voucher. Applicable from, enter the appropriate date. Set, alter GST details, yes. Percentage of calculation, percent, enter the applicable tax rate, e.g., 9% for CGST if rate is 18%. Step 3. Create stock items. If you deal in goods, create stock items and configure them for GST. 1. Create stock group, O path, gateway of tally, inventory info, stock groups, create. O name, enter the name of the stock group. O under, primary. O set, alter GST details, yes. O enter tax rates. 2. Create stock item, O path, gateway of tally, inventory info, stock items, create. O details, name, enter the name of the stock item. Under, select the appropriate stock group. Units, select the units of measure. GST applicable, applicable. Set, alter GST details, yes. Enter tax rates. Step 4. Recording a sales invoice 1. Navigate to sales voucher, O path, gateway of tally, accounting vouchers greater than F8, sales, 2. Enter invoice details, O invoice number, auto-numbered or manually enter the number. O party A, C name, select the relevant customer ledger. O sales ledger, select the appropriate sales ledger, e.g., sales, GST. 3. Enter stock items and quantities, O select the stock item from the list. O enter the quantity and rate, tally will calculate the total amount. 4. Apply GST, O select the GST ledgers for the applicable taxes, CGST, SGST, IGST, based on the transaction type, intrastate or interstate. O tally will automatically calculate the GST based on rates entered in the ledger. 5. Review and save, O verify the details of the invoice, including stock items, quantities, amounts, and tax calculations. O press Ctrl+A to save the voucher. Step 5. Printing the GST invoice 1. Navigate to print. O after saving the invoice, press Alt+P to print. O invoice printing configuration. Ensure that details like GSTIN of your company and the customer, HSN, SAC codes, item descriptions, and tax rates are properly included in the invoice. O invoice format. Tally allows customization of the invoice format. You can configure the layout to ensure all necessary GST details are printed. 2. Print preview. O use the preview option to check the invoice before printing. O verify that all required details, GST rates, amounts, party details, etc., are correctly displayed. 3. Print the invoice. O finalize the layout and print the GST compliant invoice for your customer. Additional GST compliances. 1. Filing returns. O regularly verify and reconcile your GST transactions to ensure accurate reporting. O use tally reports for filing GSTR1, GSTR3B, and other relevant returns on the GST portal. 2. Maintain records. O ensure all invoices and records are maintained as per GST requirements. O regularly back up your tally data for safety and compliance purposes. Next question. Question number 8. Explain procedure to generate financial statements and GST reports in Tally. Generating financial statements and GST reports in Tally ERP9 is a systematic process that involves properly recording transactions, configuring settings, and accessing the relevant reports. Answer. Generating financial statements in Tally ERP9. Step 1. Setting up your company and configurations 1. Open Tally ERP9 and select your company. 2. Ensure all transactions are recorded. O. Before generating financial statements, make sure that all financial transactions are properly recorded in Tally under the appropriate ledgers. Step 2. Accessing financial statements. 1. Profit and loss account. O. Path, gateway of Tally, display, trial balance, profit and loss. A. C. O. Tally will automatically generate the profit and loss statement based on the transactions recorded. O. Customizations. You can customize the report period, view detailed or condensed reports, and export or print the P&L statement. 2. Balance sheet. O. Path, gateway of Tally, display, trial balance, balance sheet. O. This statement provides an overview of the company's financial position on a specific date. O. Customizations. Customize the report period, detailed views for each head, and export or print the balance sheet. 3. Other financial statements. O. Trial balance, gateway of Tally, display, trial balance. O. Cash flow statement, gateway of Tally, display, cash flow. O. Fund flow statement, gateway of Tally, display, fund flow. Generating GST reports in Tally ERP 9. Step 1. Configuring GST details. 1. Enable GST. O. Path, gateway of Tally greater than F11. Features, set, alter GST details. O. Enter GST registration details like GST IN, type of dealer, applicable from date, and tax rate slabs. Step 2. Recording GST transactions. 1. Ensure all GST transactions are properly recorded. O. Sales. Use F8, sales voucher for recording sales. O. Purchases. Use F9, purchase voucher for recording purchases. O. Ensure GST components, CGST, SGST, IGST, UTGST, are properly configured in each voucher. Step 3. Accessing GST reports. 1. GSTR1, details of outward supplies. O. Path, gateway of Tally, display, statutory reports greater than GSTR1. O. Content, contains details of all outward supplies, sales, made during the period. O. Customizations, select the period from the period button, F2. Verify details, make corrections if needed, and export the file in the required format for filing. 2. GSTR2A, auto-drafted input supplies. O. Path, gateway of Tally, display, statutory reports greater than GSTR2A. O. Content, auto-drafted report generated from the details uploaded by the suppliers. O. Verification, verify that all inward supplies, purchases, match the supplier uploaded details. 3. GSTR3B, monthly summary. O. Path, gateway of Tally, display, statutory reports greater than GSTR3B. O. Content, a summary return that includes details of outward supplies, input tax credit, tax payable, and tax paid. O. Customizations, select the period and verify the summary of transactions. Correct any mismatches and export the summary for online GST filing. 4. GSTR4, quarterly return for composition taxpayers. O. Path, gateway of Tally, display, statutory reports greater than GSTR4. O. Applicable for composition scheme taxpayers. Verify and export the details for filing. 5. GSTR9, annual return. O. Path, gateway of Tally, display, statutory reports greater than GSTR9. O. Content, annual return summarizing all the monthly, quarterly GST returns filed during the year. O. Verification, verify the annual summary, reconcile differences, and export for filing. Step 4. Exporting and filing GST returns. 1. Export GST reports. O. Select the Export button in the GST report view. O. Choose the appropriate format, Excel, JSON, CSV, as required by the GST portal. O. Save the file on your system. 2. Upload and file on GST portal. O. Log in to the GST portal, www.gst.gov.in. O. Navigate to the return filing section and select the appropriate return form. O. Upload the exported file from Tally. O. Verify the data online and submit the return.